I'm only earning 4 or 5% really on my money right now in this piece of real estate, with all the risk, with the volatility, with the work. And when you can go and exit a property and go into something that's producing double digits, distributions monthly, very little volatility, and with the deferred sale to be able to completely defer out those gains.
But it's going to cost me all this money to get out, right? And it's like, well, that's one way to look at it, but and then it was the break even analysis of, well, how long would it take for you to make up those fees that you paid, and then what will your picture be like in 24, 36 months going forward. And so talk about it from the perspective of a multifamily owner, and that, what would you say to that person there? Maybe it's the same thing you just said for the annuities, but any thoughts on that?
Yeah, I'll just say, specifically to all of our funds, but specifically to the lending fund, people choosing to exit real estate, especially, choosing to exit, assets where you have a very low basis, is where so much of our capital has come in over the years, and people realizing, all right, I'm in this asset that I've owned for 5 years, 10 years, 20 years. And being able to exit that asset today and get out of, number one, the management, the operations, the work necessary. And for many of our investors, that's a big part of the equation. They don't want to do that work. They don't want their children or their wife or husband, most commonly kind of their wife, to have to take over dealing with that piece of real estate, if he's no longer here, is another factor often. But then looking at, all right, putting aside even the work side of it, saying, all right, I'm only earning 4 or 5% really on my money right now in this piece of real estate, with all the risk, with the volatility, with the work. And when you can go and exit a property and go into something that's producing double digits, distributions monthly, very little volatility, and with the deferred sale to be able to completely defer out those gains. It's an incredible kind of aha, I think, for a lot of people. And I'd say, probably 20% of the capital we have, 25% of the capital we have is in those situations of somebody exited, the money was in real estate. They exited from managing a piece of real estate, operating it, getting generally low returns, and now move that money into our funds. And it's not only, generated much higher returns, but also taking away the risk, the liability, the work. And we've seen that again and again. And it's been the difference for many people being able to fully retire, or being able to really, vacation the way they wanted, or so many other, significant life changes we've seen time and time again.
Amazing. Yeah. And by the way, if you want to learn more about that, you can go to capitalgainstaxsolutions.com about how to exit your business or real estate, to your cryptocurrency, primary home, defer the capital gains tax, and then to be able to turn around and all tax deferred, be able to invest into a DLP lending fund and be able to get those returns, but all tax deferred.